Welcome to another market video. You notice that this week we have a complete reversal of the previous week on the S&P 500. And we see last week we have 5 consecutive updates. And in addition to that, it is above this 30-day or 30 period moving average cloud. Now, I put out a video and also a write-up on how you could get access and install this free ThinkScript that I developed for the Thinkorswim system. So if you are interested, go and check out the description below. I have placed a link there. Click on that link and it will lead you to the write-up and also the video showing you some of the features that I have built in on this moving average cloud. Now also notice that, remember last week, the video, I was talking about the 5,500 level. I was saying that the 5,500 and also the 5,300 level were the level to watch. And if it is back up above the 5,500 level, then the all-time high is back in play. And as you can see from last week, it actually got as close as almost 0.6% or 33 points, less than 34 points from its all-time high. And as of Friday, it is only a little bit over 0.75% or 44 points from the all-time high once again. And here we are looking at the NASDAQ 100. Although the NASDAQ 100 came up as well, it also had a good week and also 5 consecutive updates. But also it is still beneath, quite a distance below its all-time high. It's almost 5.5% or over 1,100 points. So it is still coming up to this trend line here. So we'll see in the coming week, will the NASDAQ 100 break above this 20,000 level? And if it does, then maybe we can come up and fill this gap and put this all-time high back in play. And if we look at this monthly chart of the S&P 500, as you can see that it is down a little bit from the August close. And basically we're looking at a 0.4% decline from August from the previous month. And looking at the Dow Jones came up, and also look how close it is. It got to its all-time high. It's only 0.12%. So one time during the week, and essentially 51 points to its all-time high. So right now, as of Friday, it is less than 0.5% or 190 points or so from its all-time high. And here looking at the New York Stock Exchange Composite, it also is getting back near its all-time high. Right now it's 0.9% or 176 points away. So it'll be interesting to keep an eye on this index when the S&P 500 and the Dow Jones Industrial put in a new all-time high. We want to see would this index be confirming those all-time high. And looking at the chart of the indexes, notice all the indexes are above the 30-period moving average cloud. They are all in the green. And looking at the sector this week, a lot of the sectors that were down last week or below the 30-period moving average actually came back up and moved above it. For example, XLK, although it is still, making a lower high. And also the consumer discretionary is coming up, getting near its high here, along with communication. Then we look at the retail, even though the retail did come up a bit, but it is still pretty much consolidating inside of this range between 78 and 72. And the industrial also continue its move back up toward its high. And the energy continued to slide down, so that kind of gives you some idea. I think the market is anticipating slower growth. And looking at the defensive sector, these sectors tend to perform well, and right now they continue to perform well. During a early phase or a recessionary period, the consumer stable continue to move up to a high, and here is the healthcare getting close to its recent high, and utility is at an all-time high here, or at least at a new high. And the real estate is also continue to move higher. And the financial, although it did pull back a bit, but it is holding firm near its high, and it is above the 30-period moving average. And looking at the S&P 500, you can see the relative performance of these defensive sector. They are pretty much outperform the S&P 500. Looking at some of the industry here, we see that the semiconductor industry came up quite strongly last week, got a nice little recovery, but it is still at this lower high. So we'll still be watching the semiconductors to see would it be able to get back up above this pivot high at 250, 251 area. And also the energy, the oil and energy sector is still weak. We did see the retail came up and kind of holding steady, but and also the biotech is still holding strong. And the minor is lower high, lower low, even though we did see a little bit of a rally last week coming back up. And the banking sector is still holding firm here, although we saw previous week or earlier in the week, we got a little dip, but it did come back up by the end of the week and still above the 30-period moving average. And right now, also the home builder is continue to move higher, along with TLT. The long-term bond finally broke that 100 and move about the 100 level once again. As you can see from last week's turnaround, we noticed that the market participant is getting more complacent once again and less fearful. And at the end of the week, they are putting the risk back on. From the put-call ratio, it is down at 0.64, and the VIX is down at 16.5 at Friday's close. And looking at the internal on the up-down volume ratio, you can see that there was some buying pressure throughout the week, especially on Friday. We have over 5.5 to 1 in favor of the up volume. And look at the bond market participation on Thursday and Friday. On Friday, there were more than 2,000 more advancing stock than declining stocks. And looking at the new 52-week high versus 52-week low, that's another sign of strength here. And you see that the number of stock make new 52-week high surge above 300. On Friday, there were 356 stock make new 52-week high. And also the contrast is the contraction on the number of stock make new 52-week low. On Friday, there were only 10 stock make new 52-week low. And looking at the New York Stock Exchange cumulative AD line, it made another new all-time high. So this cumulative AD line has continued to flash positive divergence between the S&P 500, and that's the way the market is telling us to look for a higher level for the S&P 500. And for the NASDAQ, we also see strong buying pressure throughout the week on the up-down volume ratio. On Friday, almost 3 to 1 in favor of the up volume. Likewise, on the daily advanced decline, we see broad market participation. And on Friday, there was over 2,100 more advancing stock than declining stocks. And for the new high, new low, we see that the number of stock make new 52-week high surge back above 200. On Friday, there were 249 stock make new 52-week high versus only 60 stock make new 52-week low. And you see how it contracted from over 200 down to below 100. And for the AD line, for the NASDAQ, we did not see any sort of a divergence on the short term, but we're still looking at this long-term divergence and negative divergence. Now, the key thing to watch is, will it get above this pivot high here on the AD line when it break above 20,000 level? So based on the internal, especially the new high, new low, the market is still showing internal strength. And the positive divergence between the New York Stock Exchange cumulative AD line and the S&P 500 tell us that we will likely see a higher high for the S&P 500. Let's take a look at the indexes, starting with the E-mini S&P 500 future. Looking at this volume profile chart only, as you can see that we are looking at the value continue to move higher. So that means the market is accepting these higher prices. And we're basically looking for the auction to auction back up above this little bit of a balance area here, somewhere around the 5660 area. Then we possibly, once it break out of this balance area, be looking at this high here. Now, next week, we're going to roll to the December contract. So the chart is going to be looking a little weird. So just bear with me on making that adjustment. Take a few days before we get back on track. And here, looking at the market profile chart for the ES, we see that on Friday, we actually have a poor high here. and we also have some single print up here that need to get filled. So I wouldn't be surprised to see this 4 high to come up in the in the coming week and pushes up to this high. And looking at this daily chart for the E-mini S&P 500, notice that it did find support here at this low volume zone, and it came up and took out the upper range of the weekly expected move and came to this high volume node here. So basically right now it is in the process of retracing this particular balance area here. We're basically looking at this balance area. So the coming week we'll be watching this low volume zone here. Would it come up to this pivot high, then this all-time high will be in play. So as you can see from the next week expected move, the range is, the upper range is pretty much above the all-time high here. And the low range is pretty much close to where it settled last Friday. So these numbers are not for the September contract. And we basically have to wait for the December contract price action to make any sense out of these projected range. And looking at the SPY, we saw that it bounced nicely off of this low volume zone here and came up to this upper range. It did not do too much of a filling in on this region here in terms of trading volume, but it did move back up to this balance area here. So right now we're basically looking for a break above this balance area, then this all-time high will definitely be in play. And here's what the market is pricing in. It's pricing in between 570.70 and 571.20. So definitely is up in the 571 area and much higher than the all-time high here. So right now basically the market is pricing in for a new all-time high for next week. And for the low, the lower range is 552.80 and 548, and that's basically coming down to this area here and try to basically coming back down to this. Remember we were talking about this little bit of a double bottom type of a pattern here on the intraday basis. So it could be coming back down to test this pivot, this double bottom pivot high here. So, but again, basically on my expectation, now I could prove wrong again, and that's not the first time, and it won't be the last time either, is basically looking for a new all-time high from the S&P 500. And for the NQ, we see that the NQ also got a nice bounce off of this low volume node, or the volume dent here. Now it's coming up and bumping up against this descending trend line here. So we'll see, would it be able to get up, get above this low volume node here near 19,700 and possibly come up and test this 20,000 level, this high volume node here near the 20,000 level for the coming week. And for the QQQ, we actually see that it closed above the weekly expected range last week here and came up to this trend line. Also came into this balance area here, this balance area that we've been watching. And for the coming week, the market is pricing in the upper range between 486.50 and 485.40, and the lower range between 465.30 and 461. So you notice that market is not pricing in an all-time high for the Q, and unlike the S&P 500, the SPY. So we'll be watching to see would it be able to break this trend line and come up to this 485 area, this upper range, and take out this pivot high and see would it get to this low volume area and into this balance area, and that maybe will put the all-time high in play for the near future. So is the S&P 500 forming a top? Looking at the S&P 500 cash index here, remember last week we were talking about this level here, this 5,500. We'll say if it break about this 5,500, then this all-time high will be in play. You see right now it is just a little bit less than 44 points away from this all-time high. So will it be able to get to next week and put in a new all-time high, or will it get rejected once again and pushes back down to this 5,400 area once again? So the probability said right now that we are likely to see a new all-time high from the S&P 500 based on the internals and also the market sentiment. So, but hey, anything is possible. We could be wrong, right? I mean, it won't be the first time and it won't be the last time. Like I said, the market's job is to fool majority of the people, majority of the time. So if majority of the people is expecting an all-time high, then there's always that possibility that the market will do the opposite of what the majority is expecting. So just be careful out there. I am expecting to see a new high. Then who knows what will happen after the FOMC and after what Jay Powell have to say with the rate reduction. Be sure to smash the thumbs up to give it a like to help promote this video. And if you are new to this channel, click the subscribe to support this channel. And be sure to go check out my Substack page and also the write-up that I have for you to download and install the link script for the Thinkorswim platform on that moving average cloud if you are interested. So good luck on your trading.